What's going on, guys? Welcome to the Credit Plug channel. So for today's video, we're going to be reviewing 5 business credit accounts that you might want to consider for 2024. Now, first up on the list, we have Toolbox. Now, I don't think there's any reviews out on this just yet, but Toolbox is another one of these fintech startups. They offer a corporate management, expense management platform, as well as a corporate card. But what makes them unique is that they also offer a business line of credit that goes up to $250,000. So not only is it a line of credit, but they also offer a term loan. So they give you the option of either a line of credit or term loan. And then they also have a corporate charge card. So the corporate charge card is going to be for more established businesses. So typically how this would work, unless you're over that 1 million in revenue mark, you can start off with the line of credit or the term loan and build your way up to the corporate charge card. So this one, I would say the requirements are fairly high. This is not going to be for like a startup type of business. Now, real quick, in terms of the Toolbox line of credit that's offered, now this is best suited for cash flow positive businesses with 30 to 60 day receivables in terms of revenue. The minimum requirements is $250,000 in revenue in 6 months time in business. When you go through the underwriting, they pretty much just do KYC. So you have to actually scan a copy of your driver's license or government issue photo ID. You take a selfie, they do a little scan, a biometric scan, and then you just connect to Plaid, and that's pretty much it. They're not really asking you for tax returns or financials or anything like that. This is really going to be cash flow based, and you can get a quick decision. Now, the corporate charge card is going to be, again, as they say right here, for more established businesses with revenue 1 million plus can upgrade to Toolbox's corporate charge card. Now, what sets Toolbox apart from some of these other platforms out here is that not only do they offer a corporate charge card, an expense management platform, but also a line of credit. Now, they're more or less catering to more established businesses. So this is not going to be startup friendly. You do need to be generating some cash flow. So if you're over that 250K revenue mark, then you could definitely try Toolbox out. Next up on the list, we have the Flex Business Credit Card. So this is actually a net 60. So a lot of the expense management corporate cards, like a Brex or Bill.com, formerly Divvy, it's a pay in full every 30 days, right? So a net 60 gives you a lot more flexibility, right? You have 60 days after the statement cycle. So what makes this kind of unique, you actually can get up to like 74 days because the way it works, each cycle is like a 15-day. So from the 1st to the 15th of the month, that's one statement cycle. Then from the 16th to the end of the month, that's the second statement of the month. So your bill is not actually due until 60 days after the end of the statement period. So let's say, for example, it's April 1st. I make a transaction for $20,000 on April 1st. And then on April 15th, that's when the statement cycle ends. And then the 60 days, the net 60 doesn't start till 60 days after the end of the statement period. So if that's April 15th, then the bill wouldn't be due in full until June 15th. And the interesting thing about this is that if you don't pay the balance off in full by that 60 day after the end of the statement period, they pretty much just apply an APR. I believe for my account, I think it's like 24%. So pretty much if you don't pay it off in full, you're just going to be subject to a lot of back interest, and they're going to apply a high APR. But I think in terms of leveraging for business, I mean, 60 days is a long time. And actually, like I said, you can get up to 74 days technically in terms of the longest time between when you make that purchase and also when you have to pay it off in full without incurring any interest. So to be honest with you, I think this is a game changer. It does not impact your personal credit. So one thing about this, they will ask for financials depending on the limit that you get. So if you're wanting, like, let's say $100,000 limit, I think I had to send them like a P&L and my last year's tax return. And that was pretty much it. So like for higher limits, they may request additional documentation, but It's not a hard pull. You're not going to get an inquiry or anything like that. And so I really do like this. It's very flexible. And I think the corporate cards that are allowing more flexible repayment terms, such as, like a Capital on Tap, and now they even have with Ramp Flex, which we'll go over, as well as Flex, formerly FlexBase. Those types of accounts are going to get much more, use and utilization from business owners, because if you have a longer time horizon to repay, let's say, some short-term business expenses, you're going to be more likely to use one of these types of cards versus, like, let's say, a Brex, where you have to pay it off in full every 30 days. So I think some of these newer fintech corporate expense management platforms / corporate cards are starting to listen to the users and make more flexible repayment terms. Next up, we have Capital on Tap. Now, this has been one of my favorites for a couple of years now. Capital on Tap first started out in the UK as well as other countries in Europe, Spain, I believe. And so back in, I want to say 2021, they start to expand in the US, and they are backed by WebBank. Another thing that I like about them is that they don't do a hard inquiry, so it does not affect your personal credit. And I think the most interesting thing about Capital on Tap, not only their underwriting, so it's not hard pulling you, it's not reporting on your personal credit, but their repayment terms are very flexible. So they give you the option of a pay in full, but they also allow you to revolve up to 90% of your balance, your statement balance. So again, that gives you a lot more flexibility. Instead of paying off in full, you can just pay 10%. Next up, we have Ramp. Now, Ramp was one of the, I would say, initial sort of corporate expense management, corporate cards. So back in 2020, 2021, you had really three major players, right? You had Divvy, Brex, and Ramp. And there's been a lot of restructuring. A lot of these corporate expense management startup fintechs kind of changed their business model. And I think Ramp wound up becoming the winner out of, that battle between Brex and Divvy. I think Ramp introducing the working capital was a game changer. So let me explain that real quick. So aside from the corporate card, the expense management, they also offer working capital. So pretty much how the working capital works, let's say you have some vendors where they may not accept a credit card. So what you can do, you can use Ramp Flex or Ramp Working Capital. I think they use that name interchangeably, but pretty much you would upload the invoice, and then you could decide whether you want to pay that invoice in 30, 60, or 90 days. And what Ramp will do is they'll send your vendor a ACH deposit or a check for whatever that amount is, and they'll just bill you later plus whatever the fee is, right? So they give you several different options, 30, 60, or 90. And the longer you push that invoice payment out, is the higher the fee. So last but not least, we have Fair Figure. So Fair Figure offers business credit monitoring, but it also offers the Fair Figure card. Now, what I like about Fair Figure is that this is more or less an entry-level type of business credit account. So instead of going to like Quill, Uline, Granger, building credit that way, or business credit, you can actually build business credit with the actual bank-issued MasterCard. And so Fair Figure actually offers two different trade lines that you can build business credit with. They pretty much have a credit monitoring service, right, where you can get, for example, credit safe report. And I believe they're also working on like Experian, Equifax, D&B. You could also get your personal credit scores. And they also have this cash flow analysis as well, which kind of just shows the health of your business based off your cash flow. They have this Fair Figure card, which does report to the business credit reporting agencies. There's no personal guarantee or personal credit check. And I would say it's fairly similar to what NAV did. So like NAV has the NAV Prime card, but they also have business credit monitoring. And so they'll actually report the credit monitoring subscription as a business trade line. All right, so let's recap some of the key advantages as well as disadvantages of these 5 business credit accounts we just covered. So again, Toolbox is a new fintech organization. They offer fast underwriting, so they're just doing KYC and they're looking at your banking activity through Plaid so you can get a quick decision. They also have high limits, so the line of credit as well as the term loan go up to $250,000, and then they also have a corporate card that goes up to much higher limits as well. So another advantage, unlike a lot of like corporate accounts where you could just swipe, or maybe they can do invoice financing, with Toolbox, you could actually get access to a line of credit. So this actually gives you cash access, money that you can put in your pocket, right? Now, in terms of Ramp, what I really like about Ramp is, again, the working capital aspect. So you get a net 90 terms to repay invoices. When you think about a net 90, that's almost about 25% of the year. And then it also allows you the ability to use the charge card, swipe the card. You also could create virtual cards. It integrates with different accounting softwares. So Ramp is really great. Capital on Tap, again, love the flexible underwriting and the repayment terms. So again, Capital on Tap is not going to do a hard pull. They're just going to do a soft pull on Experian Personal and a soft pull on Experian Business, but no hard inquiry. And this account does not show up on your personal credit report, so it's not going to impact your debt to income on your personal report. And they also have very flexible repayment terms. So as I mentioned, they give you the option of either doing a net 30, so a pay in full, or you can do a 10% of your statement balance, right? So that would be the minimum payment. So let's say you charged $10,000 this statement, your minimum payment would be $1,000. So that's pretty much how that works. Flex, again, they have really high limit, flexible repayment. So again, these roll-in, statement, and they basically give you a net 60, so 60 days after the statement period to pay the balance off in full without incurring any interest. And then Fair Figure, easy approval, it builds business credit, and they also have business credit monitoring, so it's going to be great for newer businesses. All right, so now let's go over some of the key disadvantages. Now with Toolbox, again, the requirements are very high, so this is not going to be for newer businesses. So for that reason, I don't think Toolbox is going to be as widely accessible, especially for businesses that are not generating a high amount of cash flow, right? So a new business with low cash flow is probably not going to qualify. And then again, to get their corporate card, they want to see that your business is generating over $1 million in revenue. So again, Toolbox is going to be more of a niche sort of product for more established businesses. So that's one of the disadvantages. With Ramp, again, I'm a big fan of Ramp. The only thing that I don't like about Ramp is the fluctuating limit. So Ramp has read access to your main bank account, right? Your main business bank account. So it can see differences, fluctuations in your checking account balance. So if your checking account balance goes lower, then your limit is adjusted accordingly. So sometimes you don't have a predictable or dedicated credit line with Ramp because it's always fluctuating based off of what's going on in your business banking account. So that's one of the disadvantages with Ramp. So Capital on Tap does do frequent verification. So every couple of months, maybe once or twice a year, they might want you to just verify some things. So oftentimes you might notice that your card is blocked or you can't use your card until you do some type of verification. And another thing that I've seen with Capital on Tap is that sometimes they can be extremely picky with where you're actually using your card. I've actually had a situation where I had to speak with a representative, and they were basically asking me about the nature of a specific purchase. I think it was at Home Depot or something basic, right? And so Capital on Tap is not something where it's like, all right, you're going to do manufactured spending or you're going to try to pull cash off of it, or they really do look into your spending activity, see how you're actually using the card. And sometimes transactions could get denied. Let's say if you try to go on a gambling website and try to use the card, is going to get blocked, or if you're trying to do something that falls outside of their guidelines. Now with Flex, or formerly FlexBase, the only thing that I could really say is that they don't give you direct cash access. Now there are ways of getting cash off of a credit card. Now with Fair Figure, again, this is going to be mostly catered to newer businesses, so you're not going to get very high credit limits. And if I recall, I think the credit limits go as low as like $250 or $500. So again, you're not getting a crazy huge credit limit. So if you're a more established business, you might not have as much utility with Fair Figure because, again, the credit limit, they're not giving out 50,000 or 100,000 limit credit lines, at least not yet. So that's the other disadvantage, limited credit limit. But you also have to think about who the target market is, right? So like, if we're going to do a comparison, Toolbox and Fair Figure would be at opposite ends of the spectrum, right? Fair Figure, very new businesses. Toolbox, more established businesses, so higher requirements. Fair Figure, lower requirements, easier approval. So it's just a different target market. So I also wanted to throw this out here. So anyone who is interested in applying for Ramp, you can get $250 if you use the link in the description of the video. So I wanted to throw that out to you guys, $250 once you get approved and spend at least $1,000. So you could definitely take advantage of this bonus offer. Anyways, that's all for today's video. Let me know your comments and questions down below. And until next time, take it easy and we'll talk to you soon. Peace.